Hello traders, I will be going over the iFVG continuation model. Now, many traders try to look for reversals, oftentimes with inversion fair value gaps. Now, while that's definitely a good opportunity within the market at some times, it's always best to look for the continuation opportunities. So whether that's on the 5-minute time frame or the 1 hour or the 4 hour in this case. Now, if you're unfamiliar with an iFVG is, then simply go over to the video on this channel going over iFVGs. It's a very simple concept to understand. So here, we can already see that there was a low that was swept. Now, before understanding this model, which is very simple, more deeply, we must also pay attention to highs and lows that are potentially being left behind. Because when we understand that simple concept, we can then look for opportunities using this model. So simply understanding highs and lows and seeing how price closes above them or sweeps beneath them, as we can see here, is very, very important. And when price begins to take out significant highs multiple times, as we can see here, that means that it is in a bullish run. Vice versa for a bearish run if it is taking significant lows non-stop. And so we must focus on that opportunity first, or that concept first, before using this iFVG continuation model. And so here we have a bullish one, right? We have price sweeping this low. Very simple to understand. Price closes above it. This becomes a bullish iFVG. Now the problem becomes that most traders just instantly try to spot these because of one potential outcome that happened previously, and they try to long or short any of these iFVGs into the next liquidity pool. Now, the thing is, while this may work at certain times, what's best to do is to wait for a continuation opportunity, because those are always going to be the easiest and low-hanging fruits. What I mean by this is, if we're bullish here, as we can see, we can wait for another inversion fair value gap to form. Now, something, before we look into that, something to not do is use fair value gaps that are so far away. So for example, if this reversal occurred here and we have a bearish gap here, we want to see price close above that, correct? But as you can see, it is just so far back to be able to use that as an entry. So we must use a close proximity iFVG with that, right? So to make this easier, I'm just simply going to grab the iFVG's enhanced indicator here, and we're just going to plot these, right? And we can go to any time frame, but as long as we understand the beginning of the concept there, then we're going to be able to look at price action here. So now, as we can see with the enhanced iFVG indicator, we can see that the same exact concept that we talked about earlier is happening here on this price structure. We can see how price swept this low here, and this is the first stage reversal. The reason behind that is because of the current structure. So as you can see, price was originally pushing up, which was bullish. But after this bearish inversion here and this continuation one right here, price became bearish for the short term. After sweeping this low, it began a new price leg, and it began pushing back towards the buy side. So what happened? Price closed above this bearish inversion and this one as well. And because of that, we can see how that became a bullish opportunity. Now, again, most traders would simply just take this one right off the bat. But if you wait simply just for a continuation, you're going to be far better off looking for those opportunities. So as price continues to push up, we want to see a couple of things. We want to see price close above the bearish inversions up here. And we also want to see it respect the bullish fair value gaps right here. If it leaves any, it's not always going to be this pretty, but if it leaves fair value gaps, you want to see price respect those. And if there's more bearish fair value gaps, you want to see those get inverted to become a continuation iFVG. And when that becomes a continuation iFVG, this is the better opportunity compared to this one right here, because now you are already in a reversal stage, and this is a continuation opportunity. So when you enter here with your stop at the pivot low or anywhere around here, targeting the closest proximity high or some untapped fair value gap, the opportunities become endless at that point, and you can look for continuation opportunities thereafter. Now again, if you add more confluence, like for example the higher time frame fair value gaps or SMT, it could potentially become a better opportunity. But regardless, when you look for a continuation like this, in this continuation iFVG model, it becomes much simpler to look for opportunities even intraday. So let's go down to the lower time frames and see how fractal this can get. So let's start off by looking at this opportunity here. What stage are we in and what should we be looking for? Well, this is actually a good example. You can already see that it's already begun the reversal stage down here earlier in the day. There's a 15-minute bullish gap, prices closed bullish past that bearish fair value gap. It has inverted it. There's an SMT with the Dow Jones and price is already scaling up. When we zoom in, we can already see that it is continuing that trend and the current movement from before. So here you can see a bullish inversion. Price respects that, goes higher. Here, off slightly after New York Open, we can see again a bullish inversion and price continues thereafter. The reason this happens is because, again, this is a continuation model and it's already continuing off the reversal. Now, what sets the stage again or resets the scale, to put it lightly, is when we have a bearish inversion and another bearish inversion after that. At that point, you have to wait for a new reversal iFVG and then a continuation. So let's see what happens here in the rest of the day. Here we can see again that there is a bullish iFVG, so we're continuing higher. It's a very simple thing to understand there. Very quickly, you can see that now there is a bearish iFVG reversal. Price does push down, and it also closes through that bullish gap right here. So we have a couple of bearish iFVGs. What this means is that this resets the opportunity in the model. So because this had a bearish iFVG, we must wait for a bullish one to appear again. And once that happens, we can then wait for another bullish iFVG to form for an opportunity to get tagged in. And as soon as that happens, this is the continuation iFVG. You can see how the cycle reset. Continuation, continuation, reversal, continuation. And this one happens in a bullish 15-minute gap, which makes it much, much better. So as you continue focusing throughout the day, you'll see how that helps you avoid a lot of potential chop and or opportunities that really just don't really pan out. I hope this brought insight into the continuation iFVG model and learning to distinguish between reversals and continuations for iFVGs.